Hello, everyone, and welcome to another edition of the Forex Technical Market Update. And this morning we have a pretty big slide in the value of the British pound. We see that the British pound is down to 152.64. Now, what happened with the British pound is that the market came down, rallied up to the 156 level, and is currently down at 152.65. But the key area for the British pound is this support point just below the 151 level. If we see the market break below this 151 support, that could be fairly bearish for the British pound, and we could see a strong move to the downside with the British pound. Now, taking a look at the pivot points, we see that our weekly S2 is smack in line with the support point along with the monthly S1. This is our monthly S1 here in green, and the weekly S2 is also at this point in time. So this is what we call a confluence of support points, and we are going to see if the market can break below this area of support. And as I said, if it does close below that area of support, that would be fairly bearish for this currency pair. Taking a look at the US dollar index, the market is coming up on some resistance here in the 96.61 level, and I can just draw a line. 96.61, the market is coming up on some resistance, and we see some stalling out. So resistance at 96.61, and if the market does breach this resistance, we could see a move up to this trend line that has been hit one time, two times, three times. This will be the fourth time if the market hits this point. Okay, support in US dollar index is at this 93 level. If the market does come back to the downside and test this area and close below this area, that would be fairly bearish for the US dollar. Taking a look at the Japanese yen. Japanese yen is still in a consolidation pattern, and as you can see, let me just draw the triangle. Market is in a triangular consolidation pattern, and it's really just holding its own right now. And a break in either direction would give some more clues as to where the Japanese yen would go. Please keep in mind that the Japanese yen also has a long-term uptrend line that has been hit once, twice, and if it breaks to the downside, it could test this trend line again in the 118 level. So that's something you should keep an eye out on if you decide to short this market. There's also pretty strong support in the Japanese yen at the 116 level here. And if we do close below 116, again, you could see a pretty significant slide in the USD versus Japanese yen if these support points are breached. Remember, the Forex market is driven a lot by support and resistance. And everyone, large funds, large capital, is seeing these support and resistance points. So that's why if we do breach these points, we could see pretty significant moves in the market. Taking a look at the Canadian dollar. Canadian dollar is in a holding pattern and has been in this holding pattern, this trading range between 130 and 134 for the last month and a half. So it remains in this holding pattern and is not really doing much. Resistance is at 133.80. Support comes in at 130 and also 129. Taking a look at the euro versus the Japanese yen, the market broke out of a triangular consolidation pattern earlier this month, rallied, and it's coming back down and looks like it wants to test this 132 level. So we are going to wait to see if this market can test the 132 level in the euro versus the Japanese yen. This market hasn't really moved that much over the last couple of months, but if we do see a slide in the value of the euro, we could see this market moving down to test the 126 level. Euro this morning is unchanged. We have a doji candle as of this recording. Market is just above support in the 111 area. A break below 111 would call into question this uptrend line, and we could see the market test this uptrend line that has been holding the market since March of this year, essentially. I can imagine we're in September, late September already, and this market has been in a consolidation now for the last 7 months. So this is a very long consolidation in the markets, and I know this consolidation has been frustrating a lot of investors. But as I said before, this consolidation pattern is something that we have seen already in the markets. It happens in the markets from time to time, and you as a investor, or you as a trader, need to recognize that it's a consolidation, and not let the market frustrate you. Okay, if you let the market frustrate you, when the markets do eventually start to move, you will miss out on the move. Trading, they say, is a big part of trading. They say is psychological, and you have some folks that say trading is almost 90% or 80% psychological, and this is an example of how the markets can frustrate people who are not patient. And the thing is, as soon as they pull out of a trade or pull their money from the markets, you could see the markets take off, and then they will be even more frustrated. And it happens time and time again all over the place. So just keep that in mind when it comes to trading the markets. Okay, if you would like, as I said before, our signals, and I said it yesterday, our signals are designed to copy our trades. And when these markets start to move, we should see some pretty big gains in portfolios, because when this market has been holding for the last 7 months, and the longer it stays in a consolidation pattern, when the breakout does eventually occur, we could see a pretty strong move in the market. So if you want to get involved with the signals, now is a good time, because the market has some pent up energy, and that just wants to release and wants to unleash in whatever direction. So click on the link below this video to get aboard the signals. Thank you very much for listening, and I hope you have a wonderful day.